Hey all, welcome to ShareTreck. This is Raj here. Friends, this is the end of the day, Sunday. Tomorrow we start a new week in the market. I have always been talking about the possibility that somewhere around February, middle of February onwards, the market might start going down. And February and March are likely to be the lowest points for the year, and then things will pick up. So I'm going to follow that theme. So today's video is going to talk about my thoughts. I'm going to share a bunch of charts with you and talk about why I think February and March will be the lowest point of the year, and then things will pick up, which basically means that somewhere close to 15th of Feb, we should start our descent. That's what the historical trends seem to show. And after that, I will also have a quick look at the futures just to see what the NASDAQ futures look like for tomorrow. And with that said, let's get started. Welcome back, friends. First, let me take you to an article which I would like to show you. It has got a chart, and that chart shows exactly what happens during presidential elections. Well, I would like to start off with this particular chart, which I have found on Vetafi ETF Trends. And I want to draw your attention to two lines in this one. The first one is the incumbent Democratic Party loses. So this is the election year that we are talking about here. And let us assume this is January 2024. So if you look at this chart here, it shows that somewhere around last week of March or middle of March, we're going to see the bottom. And then in April, probably in the second week of April, things will start improving. And then we'll go further up. And the lowest point is going to be somewhere in March. Now, on the other hand, if you say incumbent Democratic Party wins, which is the thick blue line, then we see a marginal drop in February, and then things pick up. And in March, towards the third week of March or towards the end of March, we see the lowest. And then we pick up again, and the third week or end of March happens to be the lowest point for the year for Dow Jones. So this is one statistics I have found. And of course, as it says here, past performance is not indicative of future results. I think we still need to have this at the back of our mind. This more or less reflects the thought I have in my mind, but there are contradicting data points elsewhere. I would like to believe this one, actually. This is from a website called quantifiedstrategies.com. And what it says here is that it's looking at three scenarios. The black line that we have here, solid black line, is for all election years. There is no distinction. The second dotted line is open field where everybody is competing. And the third is sitting president running. So basically incumbent president running. So we are the green line at this point of time because Joe Biden is a sitting president and he's running. So if we go with this in mind, then our lowest point was January 1st. And after that, there is no looking back. We just keep on going up, up, and up, and probably a little bit of a dip in June. And after that, we are all the way up. So it's around 12% gain for the year for S&P 500. So the first chart we saw was for Dow. This is for S&P 500 with sitting president. Okay, so if we go back again to have a look at this here with incumbent Democratic Party wins, we have the lowest in March, which is not a big fall. It's not too much. It's just a very minor drop out here. But after that, it picks up and it does very well. So you don't lose here either in Dow. You don't lose here either in S&P 500. This is yet another website, and the outlook here is slightly different. Just going to expand this a little bit so you can see it more clearly. It talks about how elections move markets, and it has got around 5 charts. I'm interested in the first chart. It talks about S&P 500 average returns during election years, all the way from 1936 to 2016. And it has got this dark green line, which is when the incumbent party won. And it has got the light bluish color line for when the incumbent party lost. So if you assume that Democrats are likely to win. Then we are following the trajectory of this darker line, which probably dips in February. And after that, it's all smooth sailing because February will be the lowest point following January. But if we assume that Joe Biden is going to lose, then again, February and March, again, we come to the March, end of March or middle of March is when we have the lowest point for S&P 500 here. So this is the other data point that we have. And then I have this interesting article out here. This comes from a Daily Mail of UK, which talks about how the 2024 presidential election could impact your 401k, which is basically the stock market. And they have this interesting chart, which is similar to another chart that we saw just a while ago, where it talks about the incumbent party out here. If the incumbent party wins, it is the red line. And if the incumbent party loses, it is the blue line. And that is the performance of S&P 500 during the presidential election year. Again, 1936 to 2020. We have seen this chart before, it's identical. So if you think that Joe Biden is going to win, I think March is when you have the bottom of the market. And we start falling from February onwards. So somewhere around 10th of February next week, I mean the coming week, I think we should start seeing a drop in the share prices. And somewhere around March, we can buy it back again and hope that we are going to ride it back to the top. So somewhere around September, it will be ideal to get out, get back in November, ride the Santa Claus rally, and done. That is assuming past performance mimics what happens in the future. So with that said, so if we look at our QQQ at this point of time, we are very close to the all-time highs, and we are trying to create new all-time high. I'm zooming back as far ahead as possible in the past, and we are at the all-time high. So the elastic has been wound up and pulled and stretched as long as possible. When is it going to drop? And here, if you look at, this is what worries me a bit. You look at this line here, and I'm going to mark this as a red line of resistance. We have not been able to go above that. And this one is at around 428.55 approximately. Let me just adjust this. So this is at 429.59. So we have around 59 cents left to break through this resistance. Will that happen tomorrow? It's quite possible that tomorrow we might go up further before coming down, because RSI has got plenty of room left, a little bit of room left, I would say, to go up further before it becomes overbought. That's one thing positive for it. And if you look at the VIX had a doji candle yesterday. So there was a bit of indecision. People are wondering whether the indices can go up further. So a decision could probably arrive on Monday. And if on Monday they decide that it's too risky, everything is overvalued, let us sell off, then we're likely to come down. So there is a risk of that happening. But at the same time, if I look at the RSI is not looking very weak. It's above average, and it's not looking as if it's going to fall imminently. So there's a chance that we may have a little bit of volatility in the market, as volatility can spike upward instead of coming down. S&P 500 is also at its all-time high. Dow Jones is also at all-time high. And if you look at the US dollar index, it's also going up. Russell index has not performed very well, of course, but the index contains a lot of not so strong companies as well. So I wouldn't be surprised with that, but it's not doing that well. And put call ratio ended up being neutral. So we don't get any hints out there. So that's what I think the whole situation is looking like. So I don't have much confirmed data which way it's going to move. But if I was to look at the futures out here to get some clues, the futures for NASDAQ is negative. The market is open now. It's down minus 0.28, which is not a small amount. So tomorrow is going to be a bit worrisome. But at the same time, if you were to look at the stock market heat map, then you will see that there is very few companies that pushed up the index yesterday, and on Friday. Most of them were in the red. And among them, some of the very strong companies that pushed this up one was Meta with a gain of 20.32%. The other was Amazon with a gain of 7.87%. And of course, we always had NVIDIA doing much better. It's already pushed the index quite high. And so I don't think Meta and Amazon are going to repeat the same performance. NVIDIA also put up a strong show here at 4.97%. How much more juice is left in all of them? Of course, there is a big story behind NVIDIA, and NVIDIA can go up further. It can create new records. But how much more can Meta go up? How much more can Amazon go up? So there is going to be a bit of profit taking. And those who are holding on to Meta and Amazon are going to think, okay, I don't want to be so greedy. Let me take some profits out of it. So when the profits are taken, we'll have to see whether we are going towards defensives or we are going to go towards consumer discretionary. That will give us an idea whether it is sectoral rotation or is it a precursor to further falls. So if it goes into defensives, I would say that it's a precursor to the fact that the market is saying there is a sell-off imminent. But if it goes to consumer discretionary, that means the market feels that there is plenty of strength and it's just a bit of a rotation and the money could come back again into the Magnificent Six and they can continue pushing it up. So that's the thought process I have here. And I'm just going to look at the XLY by XLP. And so XLP is the defensive. So the way I look at this is that both XLY and XLP are ETFs that track different sectors in the market. XLY is the consumer discretionary select sector SPDR fund, and it tracks companies providing non-essential goods and services. Higher XLY performance suggests consumer confidence and economic growth. And XLP is consumer staples select sector SPDR funds, and XLP tracks companies offering essential products like foods, beverages, and household items, generally stable during economic downturns because people need to consume all this to exist. And as these are essential items, it kind of gives a defensive stance to anyone who buys XLP. So it's a bullish signal if XLY is outperforming XLP, which is what it is doing right now, because XLY by XLP is giving a number greater than 1. So it indicates optimism and risk appetite in the market. But if XLP outperforms XLY, in which case we are going to go below 1, I would say that there is concern about the economy. So we are still looking pretty healthy when it comes to XLY by XLP. So this is one additional factor I'm going to introduce in our analysis so that we can try to suss out the market. So right now, this is what it looks like. Let us wait and see what happens on Monday. Incremental information on Monday will give us an idea of what's the market sentiment, and we will take it all from there. And just to give you what is an idea of what is at stake, let me show you some really solid positions. Like if you look at NVIDIA, can you see how steep it has gone and how much it gained on Friday? It was significant. It gained around 4.97%, which is around $31.33. So anyone who had bought NVIDIA somewhere around 474.65 is sitting on huge profits. They would rather book the profit than take the risk of falling down because the balance of risk and reward is now skewed more towards risk than reward. So those kind of decisions will happen. Another thing that could happen is the computer trading algorithms, which are pre-programmed to react to various market configurations, will sense elevated levels of the market and then decide to start selling, which could also bring down the market. So I'm very cautiously optimistic for tomorrow. And another stock I wanted to show you on the screen here was Meta. If you look at Meta, there is this huge gap up, and this huge gap up has to be filled. The gap up has to be filled, right? So again, anyone who bought it even a day before at 400.91, they are sitting at huge profits. The risk reward is now more skewed towards risk than reward. So they are also likely to sell. And if you see, look at the RSI, it's wildly overbought. So it's looking crazy out there. Amazon, same story here with Amazon as well. So overall, my friends, this is what it looks like, and pretty scary. So Monday morning, I'm going to be on my terminal. I'm going to be looking at what to do with the market. And wherever there is profitability, I might probably try to book the profitability in case I see futures being red. Again, this is my personal opinion, not financial advice. I'm a person who is in a stage where I'm risk averse. At my age, I have to be a bit risk averse. I'm following that principle. I'm still in the stock market, but I want to be risk averse. That's the reason why I'll take these defensive moves if I sense that there is any way that the market is going to come down. And because I'm going to be extra defensive, whenever the coast is very clear, I would be using triple X leverage products in order to book extraordinary returns. And I'll be using it very, very selectively and very carefully, only when I have high level of confidence. And let us see how it goes. So that's my game plan for Monday. Please let me know how your portfolio is performing in 2024. Are you making any gains? And are you planning to invest in any genomic shares or AI shares? Please put it in the comment section so that I can get some new ideas. Thanks and have a great day. Bye for now.